Hi guys, welcome back to my YouTube channel, and if you're new here, my name is Esther Moffrey. In today's video, I want to show you how to trade bullish flag pattern. Yes, how do you trade bullish flag pattern? All you need to do is open your chart, and it is easier to spot this flag chart pattern. I will try to insert a picture of how it looks like. When you open any chart, the bullish flag pattern, it happens mostly on an upward trend of a market. So for this case, I will show you with Euro card. This is our Euro card. So we have Euro card. It's 4 hours. I like spotting my patterns in 4 hours. Why? Because they are very, very stable. And once they are broken, the trend will move to either direction that the price has broken to. So it doesn't have many fake outs like small time frame. So all you need to do is to spot an upward trend market. So we can see that the market was making high highs and high lows, high highs and high lows, and we have all this big push to the upward. So most of the time, many people want to short the market. They'll short the market here, they'll try to sell here, and some will try to sell here. And every time you try to sell, the market push higher, the market push higher. So I can show you how to trade bullish flag pattern in a very simple way. And this is what you do. When you find the market has gone way on the upward side, all you need to do is to mark your zone, because we need to mark our zone, and we don't need that zone to be broken anytime soon to have a bullish flag pattern. So when you mark our zone, let's say if we had marked our zone there, you can see in the next 4 hours that zone was broken. If we had marked the zone there, it was broken. But now see, this case is different. When we mark that zone in that place, the market did not break that. It did not break the zone. So what happened? The sellers took this market down. You can see this big push, and they came to this targeted place. So if you had this zone marked on your chart, it was easy for the market, for you to understand that the market would come to that place. And now what happens with bullish flag pattern? It starts to make low lows and low highs. So you can see this low will be broken, and that's what you can see. It has been broken here, it has been broken here, it has been broken here, it has been broken here. All this market is trying to do is trying to change the narrative of this market was an upward trend. So don't forget that bullish flag pattern, it just takes a break, and it takes in a downward trend, and then it go back to the original move. So don't be lied to. Even if you are selling in this market, keep in mind that if this market breaks, it can even go very high. So let's start to mark our zone. We have said you have this big push. So this is what you do. Just know that that's my big push, and my zone has not been broken. So if the zone has not been broken, you can start anticipating, is this a bullish flag? And then wait for buyers to give you a low high. So you can see all along we had this low. And then when the buyers tried to push the market again, they never removed our zone. That's why I was saying, when you have a zone here, you anticipating. If you see the zone has not been broken by these buyers, you see these buyers did not even come close, you know that now you have a zone. So what do? You mark that line. We are marking that line. That is our upward trend. And then we are connecting where the buyers were plus these buyers where they have reached the market. And here we can stretch there. We can see now the market is respecting that zone. And that's how now you start identifying the flag. So this is a pole. This is the pole. This now is that trend line that now makes the flag. And then now where the lows are being touched, you can see it's so clear. This is a low, this is a low, this is a low, this is a low. So you will try to connect those lows that are being created, so that you can understand, can this be a flag? So we have a very perfect flag. So you can see in this case the market touched once, touched twice on the upward, and then touched the third time. And then now on the downside, the market has touched once and now has touched again. So what are we anticipating here? For us to continue buying this market on a long-term trend, because once this market breaks here, it will go this same distance. So it will go this same distance. Let me show you. If the market breaks, if the market, let's say it comes and breaks, it goes the same distance as, let me show you. So if the market breaks here and retest, where does the market go? The same distance as the pole. You see here, this pole, it will go the same distance. So this market can be a very, very long-term buy. But we can still try to trade in between this flag. So what do? You wait the market to approach to this zone. When the market has approached to this zone, wait very keenly, and then just wait for a bearish candle pattern. That can be a bullish, a bearish engulfing. It can be a spinning top, a hammer, those reversal candles. And then after that, when you enter a sell, let's say the market approach here, and then you get a bearish engulfing, where is your take profit? Your take profit is this level. So there are do's and don'ts of bullish flag. How do you, what are you not supposed to do? You're not supposed to trade when it is at the center. And that's the same, that's why if you know how to identify a bullish flag pattern, it is easier not to enter a market if it has not given you a chance. So in this video, I have analyzed Euro card. Go to 4 hour on your chart. Try to mark this pattern and then try to trade it. So what happens if the market breaks this zone? So let's say the market break our zone like that. If it breaks our zone, don't enter immediately. Why? It can be a fake breakout. So what you'll do, you will wait for the market to retest the zone, and then it gives you a confirmation on with a candle, and then you do what? You enter buy, and this is long term. If the market comes here and it gets rejected, you will know, like here, you see this candle. Let me zoom it for you. That candle, which candle is this? So you see it touched our zone and it got rejected, and we had the market coming down. And then we can see again here, you can see here, we have all this spinning top, and then we have these candles, the reversal candle, and then we have this big momentum reversal candle, and then you know that market will sell. And these are very many pips. So if you entered sell there, they're almost 160 pips. So let's say the market approach to this zone, and then you get you find that if it comes here, it reacts, and then come to the other zone, it's 143 pips. So all I can tell you guys is that try to trade bullish flag pattern, and it's the same with bearish flag pattern. If you are interested with this, if you have learned something, kindly give this video a big thumbs up. Until next time, bye bye.